So let's address the listing of the elevator business first. Can you give us a sense of the timing on that?
Well, clearly, we're on track with our preparation for the IPO of Elevator, and this can happen, as we have always said, within the financial year 1920. So the carve-out is ready. We're well on track to be ready to do that. But let me say on top of that we have clearly received a lot of interest from external parties for our Elevator business, which we're currently evaluating and taking a look into whether there are alternative options. We will examine them throughout the process.
Guido, good morning. So you're looking at serious alternatives. What would your preference be, and what kind of valuation are you applying to the elevator business? Lots of numbers being bandied around, 15 billion being one of them. Is that accurate?
Well, I mean, you see a lot of numbers, and one has to clearly see throughout the process where capital markets are and what alternatives might be. I think it is too early to say that. Clearly, value is driving us, long-term value for ThyssenKrupp and its shareholders, and how we can really realize that. And there might be alternatives that could be evaluated, but it's clearly too early to say what is there on the table. When the time is due, we will assess what's the best for us and our shareholders.
Are all these moves that you've announced today, Guido, going to be enough to turn the company around?
I clearly think so. If you take a look, for example, behind the current figures, you see some strong developments as well. Although the overall numbers are clearly distorted by the weak automotive industry and especially the problems in steel, you see that in Elevator we improved margin and could catch up what we lost compared to previous year in one quarter. So we're clearly looking ahead that we can fulfill our guidance for the full year, and we've seen the turnaround in the margin there. Overall, all our capital goods businesses have increased their cash flow by more than 500 million compared to previous year, which is quite a step. So you see that we largely lost from steel and the auto sector, but we can clearly see that our new changes in the strategy are working through, and we see first results in our P&L and cash flow.
Look, Guido, we're always trying to get a sense of the speed of the shift, of the change in the global economy. You talk about the autos and you talk about the steel business. Talk to me about the momentum of the slowdown, and where is that most visually, I suppose, most demonstrated, in which geography?
If you take a look into our numbers and see where we're significantly hit, it's Europe and European steel, which is with a high iron ore prices, and because we're in steel just in Europe, this is most significantly hitting us here. On the auto sector, you see a weaker demand, especially in China. You see some kind of slowdown already in the US, and Europe is down as well. So that's rather globally. Steel, we're just affected here in Europe, but you see it from our competitors everywhere in the world as well, that they're hit by the high iron ore and the weaker demand, which is to some degree a not natural situation.
What's clear in the release today, Guido, is what you're selling, so what you're getting rid of as part of this turnaround. But in terms of what will be left, talk us through what you're going to have to work with in terms of then improving the bottom line.
Well, as we have clearly said when we announced already in May our strategy, that we have a flexible portfolio approach. And what we clearly could publish today is that we have received with our change that we do not only want to have majority positions, especially in the components industrial sector, that we've clearly seen stronger interest than we expected, and some meaningful discussions have started. So we had first kickoffs there and can see that this move was right and leading us into the right direction. What we've clearly said on top of that is that in the material sector, that we'll have strong positions in Steel Europe and in material services, but we're evaluating consolidation options there if they are around. And I can clearly say, wherever we have stated in our new TK strategy that we're open to partnerships, we have received more interest than we expected.
I'm curious, where have most of those interests come from, Guido, geographically?
Oh, it's from different geographies, but what surprised me most and was more than we expected is indeed strategic interest from strategic partners for developing the businesses further.
Have you had any response from shareholders to this latest announcement yet, Guido? Of course, we'll see where the share price opens, but I'm interested to see what you've heard from shareholders, but also the Supervisory Board.
Well, we can clearly see that all the strategic changes we had to make over the last year with the steel joint venture not coming through and the split of the company financially not being viable, we always had unanimous support of the Supervisory Board in that direction. It's not an easy situation for ThyssenKrupp as we're financially somewhat constrained, but therefore we have to react, and we always had unanimous support for what we do.
Very briefly, Guido, Larry Summers says that the US recession risk is much higher than it needs to be and is much higher than it was 2 months ago. You've been through a number of cycles. Are you seeing the hallmarks of recession risk in the United States market?
So far, we have just seen that there was a strong development of the U.S. market everywhere, and you see it in our sectors. We're largely in elevators, which is our strongest business in the U.S., which seems to be a rather non-cyclical business, so stable developing based on a good market position. The rest remains to be seen. Currently, we don't see any outlook of a recession in the U.S.